Welcome to the first quarter of 2024's market update. I'm Kezia Samuel, Deputy Chief Investment Strategist. Stocks ranked new highs on strong economic data as well as strong corporate profits, while bonds modestly retreated as interest rates rose when investors had to pare back the expectations on how many interest rate cuts they were likely going to get in 2024. Broad commodities also gained on the heels of higher oil prices as well as higher gold prices. Lastly, interest rate sensitive investments like REITs suffered and fell. Within the equity complex around the globe, it was the US markets that once again led the charge with a gain of 10.6%, marking 22 new record highs and its best quarter since 2019. However, unlike 2023, the market rally broadened in 2024. In 2023, there was a handful of stocks, the Magnificent Seven, that were tied to artificial intelligence and drove 60% of the S&P 500's 2023 annual gains of 26%. However, in 2024, the Magnificent Seven only contributed 41%, while the remainder 493 stocks contributed nearly 60%. Now, US markets were not the only ones making record highs. Both Japanese stocks as well as European stocks also made record highs as we saw better than expected inflation data, a weaker yen, and strong corporate governance coming from Japan, taking the broad developed international region up 5.9%. On the other hand, we saw emerging markets once again lag the bunch with a gain of 2.4%, as strong gains in Taiwan, Korea, and India were not sufficient to offset the losses we saw in China. Now, looking at the bonds segment, interest rate sensitive segments suffered losses. Again, as that interest rate rose, we saw US bonds drop 0.8%, while lower quality bonds that have less interest rate sensitivity, such as high yield, had a strong quarter with gains of 1.5%. Thank you for listening, and we hope you had a great week.